Hello, savvy taxpayers. Taxes can be surprisingly complicated. Today, we're diving into the world of tax deducted at source, or TDS. Understanding TDS can save you from headaches at tax time. It's like understanding how to change a tire. You might not need it every day, but when you do, you'll be grateful you paid attention. So, buckle up, grab your calculators, and let's demystify the world of TDS together. Let's start with the basics. What exactly is TDS? Imagine the government as that friend who always forgets their wallet when the bill arrives. TDS is the government's way of getting their cut up front, like that friend prepaying their share. It's a mechanism where tax is collected at the source before it reaches your account. Your employer deducts TDS from your salary and deposits it to the government. This ensures a steady tax inflow and avoids a huge tax bill during tax season. How does this TDS thing work in practice? Each month, your employer deducts a percentage as TDS from your paycheck. The amount is determined by your income level and tax slabs. The deducted TDS is then deposited to the government, with Form 16 as proof. Now, you might think TDS is only applicable to your 9-to-5 grind, but oh no, my friend. From rent payments to interest earned on fixed deposits, freelance income to lottery winnings, TDS applies to a whole smorgasbord of payments. If you're earning money, there's a good chance TDS is lurking somewhere in the shadows, ready to take its share. It's like that friend who always insists on splitting the bill, even when they only had a side salad. Now, let's talk numbers, shall we? Different TDS rates and thresholds apply to different types of income. For salary income, TDS is based on your tax slab. For interest income, it's a flat 10%. There are thresholds below which TDS is not applicable. If your interest income is below a certain limit, no TDS deduction applies. Now, let's talk about two very important documents in the world of TDS: TDS certificates and Form 16. TDS certificates are issued by the deductor and serve as proof of tax deducted at source. Form 16 is a consolidated statement provided by your employer, summarizing your salary income and TDS deducted throughout the financial year. It's like a report card for your taxes, except instead of grades, it has numbers that determine your financial fate. Just when you thought we were done with the paperwork, there's another hurdle to overcome. Filing TDS returns. Filing TDS returns is mandatory for anyone who has deducted TDS, be it employers, banks, or even freelance clients. It's like a roll call for TDS deductors, where they have to report to the government how much TDS they've collected and from whom. TDS returns can be filed online thanks to the wonders of technology. Now, for the moment you've all been waiting for, getting your money back. If the TDS deducted exceeds your tax liability, you're entitled to a refund. File your tax returns, verify TDS deductions, and wait for the refund. Sometimes the taxman can be surprisingly generous. Now, for the not-so-fun part, the consequences of not complying with TDS regulations. Failing to deduct or deposit TDS, or filing inaccurate TDS returns, can land you in some seriously hot water. We're talking penalties, interest charges, and in some cases, even legal action. So unless you fancy a visit from the tax authorities, it's best to stay on the right side of the law and comply with all TDS regulations. That's a wrap on TDS. We've journeyed through the intricate world of tax deducted at source, from understanding its purpose to navigating its complexities. Understanding TDS is crucial for managing your taxes effectively and avoiding any unpleasant surprises from the taxman. So go forth, armed with your newfound TDS knowledge, and conquer the world of taxes. And remember, when in doubt, consult a tax advisor. File your income tax return with FYITR today, and don't forget to subscribe to our channel for more insightful tax tips.